We're going to run through the charts and see what's looking good for the day ahead. Right, I'm sharing my screen now. Let me know if you can't see it. Great. Good morning, good morning. Good stuff. That CAD is slipping away. Could be a scalp there on the CAD, guys. It's in a broken down market to come in on those longs from London. So we've come up, we've made a big formation, we've come up again into it, we sold off aggressively, breaking the lows, and we're starting to build. We've got that hammer, potential engulfment. Now, ahead of the data, I don't like to trade, but scalping in what could be a fast move got a minute until that close in the 5 minute. Anyway, let's go through these charts. So I don't know if anyone caught the CPI video I put out. I was trying to explain how I look at the weekly template for setups. So I'm using days to calculate whether the market is long or short. I'm not able to hear anything. Is anyone else having that problem? Okay, Lockie ODN, we're looking at CAD right now. Okay, let's look at CAD. But essentially, that video, which I think it is this here, yeah. I did that wrong. I'll put this in the chat. If anyone wants to go and watch that later, you're not going to have enough time, I don't think, ahead of CPI. But it gives you some education on how we're looking at this weekly templates and building a bias for the day ahead, our session, and so forth. What we're doing is we're trying to identify the days that are most likely to give us the more high probability trade setups. So I've done that here, and we're going to run through some of these at your request. So gold, sterling yen, US 30, dollar CAD. Okay. Well, let's look at dollar CAD first of all. So there could be a scalp opportunity here. We need to see a breakout candle really, and a tight stop, taking some money off, break even, and let's see if it doesn't explode. Got a few minutes on this 5 minute chart. On the 1 minute chart, so this is the New York Open, and we're looking for a momentum candle such as this. So I'm happy shorting dollar CAD today based upon the weekly template. The week's template. So if we look at let's take this off. So what's happening here is we're resting on top of last week's highs, last month's highs, and we've broken up aggressively, and that's for me building a bearish thesis. So we've got all of these longs that are in the money. On the hourly basis, we can't really call this a broken down market yet until we get below 133.80. On the 15-minute chart, what we're looking for is an internal structure, higher low, lower to higher low. So you could argue that that's here. So if we write that on, we'll give it a label. In fact, we'll use a ray, pin it, support. Doesn't look very straight, but it must be straight. So we've broken that support level over here. Don't know why that doesn't work. Highlight that like that. Okay. So we've broken that support level. We've come back up into shorts, stop hunt. Double top. Breakdown of structure. See, this is a market that is breaking down. Now, it's not easy selling at support, but we've broken that now. So the thesis is we're in a broken down market. We're on the front side of that bearish trend. So another way to look at it is, well, what's bullish about it? You know, we can be wrong, but we can only go by what we see, right? So what is bullish about this? And we've had that pump up. There are longs in the market. So this to me looks like a broken down market for a scalp to the downside. Now we haven't been given any triggers as yet. We haven't really engulfed these lows. You want to see that momentum and catch that. Hi Ross, good morning. I was late and I'm at work. Is this recording? Yes, it is. Good morning. It is recording. And then in terms of the day count, which I talked about in that video I've posted, you're welcome. Let's run through that. And we are on a dollar CAD. It's on a day 3. So we're looking for, we've had a lot of days long, so we're looking for a squeeze to the downside. Not only that, we could classify dollar CAD as a first red day. Yesterday we closed lower after a series of higher closes. We closed lower, and the price action was giving us confirmation that we're in a bearish scenario for today. The price action was a move up into shorts. So we've had that stop hunt, yet it still came back down and closed lower. So that is indicating to us that this market wants to go down. Now, preferably, this would have been an opportunity for those in London to have shorted, because we came out of the Asian range, we dropped, showing the intentions of this bearish trend, fantastic, a move up, excellent, giving us a nice price to sell, selling within a broken down market's higher range. So that is ideal for selling. And there you have it. That would have been a fast. These are the trades that we're looking for. These trades that don't come back, you know, you can size into these positions. You can take some money off, and when you've got confirmation, such as here, that this market is breaking down, you can size in. Once you've taken some money off, once you've seen an indication that this is indeed breaking down, taking money off again, coming under a little bit of heat. But look at that. So that was a massive trade for people in London. So those are the setups that we're looking for. I hope that makes sense. These types of setups. So the thesis for today in dollar CAD. We are how long away from? We've got, when is this CPI? So we've got CPI coming up in an hour's time. So the scalp prospect is not getting confirmed. So what I'd rather do, if we don't get confirmation of a scalp ahead of the data, because I don't want to be in anything that's just going to trug along, and then you're maybe underwater as we come into the data. That is not a scenario you want to be in. So I'd prefer to just sit on my hands, let the data come out, and see if there are any of these currencies, gold indices, that are giving us these types of setups. So what you could call it is a first bounce scenario. So the data comes out, and you can let it run for 15 minutes. Just let the market move around, fly around, do whatever it wants to do. Go and get a cup of coffee. Don't even get tempted to move in. Maybe give it 10 minutes, but ideally 15 minutes, because you get that 15-minute candle rotation, and see on the lower time frames if you've got anything that looks as though the market has found a base, it's determining a trend, and it's giving you a setup to trade, and hopefully it will explode on the next 15-minute candle, move your stock to break even, take some money off, put more on depending on what the market is doing, and if the trade is really high quality setup for you to scale in size and be over and done with within an hour potentially. Sounds like too good to be true, but they do exist, those trades. Please image signal of your setup. Right, well currently, we've only got an hour until CPI, so I'm not looking for a setup ahead of the data. We were just coming up to a rotation on the clock, so it's 5:30 here, 7:30 New York. I was looking at, well, I'll just do a screenshot and pop that over there. So that's it in there. If you can't see my screen in the meeting, that there, but we didn't get a momentum candle breaking out. Not really. I mean, we had this 1, 2, 3 situation here, that momentum there, but it didn't break the lows. It didn't, it's put a wick in, and it subsequently came up. This was looking quite good with this pin, this engulfment. This bar here didn't give us the momentum candle to classify really as a setup. So we were talking about what we're looking for with CAD for today. Well, we ideally want to be selling high up. We want to be selling high up. So let's see what's happened. So we've broken out of Asia's range. We'll put this indicator on. It looks a bit messy now, but bear with me. So the blue background indicates the New York Open, and the grey background indicates the Wall Street Open. And those are the hours where I'm looking for the setups, because that's where generally you'll see the most volatility during the New York session. And then here we've got this red, what do you want to call it? I don't know. Red range. in a green range. Okay, and this is the the red range is the Asian session. Okay, so it helps me to identify what's gone on overnight. So we've seen that the market has melted in Asia, melted in London, it's come up into the Asian lows and found resistance below. This red line here is the prior day's close. So we're there's volume here that's the market has moved away from, and this indicates to me that we're in a downtrend, right? So what we'd be looking for is this market has come down, it's moved back up in London. There is potential here of a move lower into that rally, which is what I was looking for on that scalp, but no cigar. But this is a broken down market here. So we've come down, we've come back up, and we're looking for the downside extension. So that's what I'm looking for in in the US session, and after that data perhaps. So maybe we'll need the data, and the 15-minute candle could just fly through and therefore clear up the London longs, and so be it. But that is still for us an opportunity, because that could clear that out, and we might get a pullback and then some kind of structure, bearish structure, momentum coming back in for us to ride lower. And if we look left, we've got all of this from this week. So down here Monday, we can come right into 133.50 in a flash. So it's a broken down market, and we're looking for the move lower. I hope that helps. On dollar CAD, someone was asking for dollar CAD specifically. Let's just have a look at these yields. So we're boxed up. We didn't get the follow through yesterday that we were talking about. We were looking for the market to break. So we have this impulse correction, and we were looking for the move lower, but we didn't get that. So we're in this sideways box on yields. This is the 10-year. There's no real bias either way. We're in the third level on the downside within last week's range. So we're sort of potentially heading lower. But I think that goes against, let's look at the 2-year. The 2-year is coiling. The lower end of last week's range. Could this be coiling to go up or breaking out to the downside? We don't know. We've got last month's lows over here. So we'll just keep an eye on that, and the data could help to determine the fate of the dollar. It should do anyway. Now, in terms of the dollar, so in the day count, which I explained in that video, we came up high and we failed to hold on to that attempt to break out to the upside. Okay, so Monday, Tuesday. So that breakout failure counts as day one. So shorts are coming into the market. Shorts are in the market again for today. But on a day 3, so after that build-up of shorts, you can be in anticipation of a correction into the shorts. So we're looking for dollar strength in terms of the day count. and we're coming in towards the bottom third of this range. So when you look at that and compare it, put it across the other currencies, that is giving you an opportunity to sell the opposing currencies, such as the Aussie, the Canadian dollar, versus the US dollar. So that, therefore, goes against our um, thesis for a lower dollar yen. So let's look at the day count on this. So this is an opposing scenario. So therefore, that might say to you, well, hold on a minute, maybe I want to go in with less risk. That you're going to trade your plan regardless. And then on the other hand, I mean, it doesn't have to come back into shorts, but that is the thesis. If it doesn't, then that's a day one, day two, a day three extension. And then on Friday, what that will give us on Friday is the prospect of a day one long scenario. Right? So we've got Wednesday, Thursday, and Friday, 3 days of shorts, and that's different to the cycle. That's the day count. So Wednesday, Thursday, Friday, we've got 3 days of shorts. In that case, if this dollar does sell off, and then Friday will be the opportunity to be counter trending against other currencies in the dollar, buying the dollar, selling other currencies. Nice and complicated for an early start, but no, it's takes a bit of time to get your head around it. But we are looking for the market to set up, and we're looking for 3 days of one direction to counter trend. So it can either be 3 days, Monday, Tuesday, Wednesday. It could be Wednesday, Thursday, Friday. Okay, or it can be the cycle of the movement of the market. So the move based upon tests of the week's high and the week's low. So it's a separate scenario. So you could have, for instance, you could have, let's say this happened on Wednesday. So we've got this day one of a 3-day cycle on Wednesday. So pretend Tuesday was Wednesday, and then you had day one, day two, day three shorts as per the day cycle, and also day one, day two, day three as per the flow of the market. So you've got Wednesday, Thursday, Friday marrying up with day one, day two, day three shorts, and that gives you extra confidence on the Friday that not only have you got a 3-day cycle that's short, you've got Wednesday, Thursday, Friday that is also short. So that's giving you a double whammy, if that makes sense. Right, let's move to look at the indices. So to give you an example of how this day count thesis played out for me yesterday. So I was making that video in Asia, and what I noted was that we had a day three setup on the NAS 100. Now, I don't like to trade Asia, but the setup was there to see. So we have the day count for day three, counter trending for a long. And in Asia, that was set up as follows. On Tokyo in the open, 6 o'clock my time, this was setting up. So we noted that we had a peak formation here, and day three was anticipated to move up into shorts. So I was just looking for the pre US CPI data. It didn't come up to the target, so therefore I've had to take some off and move to break even and let the rest run. Maybe the CPI data will let that run up high, or maybe it will come down to stop me out. But I'm really not bothered either way. Ideally, I wanted to go up to target, obviously, but if it comes down, it stops me out, then I'm at break even. You move on and you look for the next setup. But these are the opportunities that we can pull from acknowledging where the market is in terms of longs and shorts. Who is in the money? Well, let's see if the market comes up and takes them out of their positions, squeezing that short. So that's the thesis. So we can predict for the day ahead then, if we're on a day 3 for this New York session, then ideally, I mean not for me because I'm in a trade already, but ideally we want that to be pulling back. So we want a sell-off, we want that to stabilize and then see it come higher. So you're having a sort of an impulse, a correction in our session for the continuation up, squeezing shorts, because we've got a build-up of shorts in the market. We've got 3 days of shorts. We might even have 3 days of breakout trades. So let me have a look. So on Monday. Okay, so Monday was a bullish close, but the day count started on Tuesday because, well, the day count started on Monday. We moved up and we failed on Tuesday. Day 1, day 2, day 3. So we've got shorts, we've got, and also you can look at this like we've got 3 drives into and around last week's low. So we've driven down, so 1 drive, had another drive, and we've had a further drive. So it's 3 drives into and below, taking out last week's low. So that is essentially pulling breakout traders on higher time frames, presuming that the market is trundling lower and it will continue lower, and therefore that gives us the opportunity to ride that market into those shorts. So that is the thesis for stocks today. Looking to buy low. So that would look rather the same on the US 30, I should imagine. So let's just clear up the chart altogether. Well, let's go out to the daily chart and view that. Someone asked for the US 30, so we're looking at that now. I want to get rid of this. I've drawn that figure on there for a reason, I can't remember why. Okay, I'm measuring. Okay. Let's get rid of this today. So, we are trading in between last week's high and low, and we've got last month's low all the way down there. Now, we've got a lot of length in this market. We haven't yet come down to a 38.2. I'd like to see the market, if it's going to correct, to give us a healthy correction to determine whether or not that's going to give us an opportunity to go long and ride it higher, prospects of a continuation to the upside. Good morning, Jay. Yes, we'll go through euro dollar in a moment. Now, in terms of the structure, it's all a bit range bound, isn't it? But I'm going to build a thesis out of this. So, as we're talking about, pushes into the low. We failed to really convincingly break out. Sorry about my fan, it's obviously making a lot of noise for everyone there. I've got a microphone on order. Resolve those noises. Well, we are front side, so difficult to long when we're front side of this bearish trend. Not giving me, not ticking the boxes for me. And it could be an opportunity to test yesterday's highs, but you are going to be running into resistance. It may not be an easy ride. If anything, according to the day count, look, so the cycle of this market this week, um, yeah, so day one, day two, day three, shorts, squeeze, we're already squeezing. So again, we're looking for the buy low opportunity, but just note that we've got resistance up ahead. So we're going to draw our highs and lows. This is on the hourly chart. That's the range that we're within. Where do we want to buy? We've talked about this in prior videos. We want to buy in the lower part of the range for the day. So this is the current range that we're in. So we're getting a nice pullback into buying territory. So we want the market to stay front side of this trend for an opportunity to try and take out resistance. Now you're likely to have sell stops here, here, up here, buy stops rather. So maybe we can trigger those, and that will be the fuel to drive the price higher up towards target. So that is a thesis. You follow how I came to that? Good morning. Gold price will go up ahead of CPI data. Need your thoughts, please. I don't know what it's going to do ahead of the data. Let's have a look at it, but I don't want to skip other people out. Someone asked for euro dollar. Euro dollar, euro dollar, euro dollar, euro dollar, euro dollar. I think that's all that you've requested so far. Great. Correct me if I'm wrong. If we need anything else, but we're going to have to speed up. So euro dollar, euro dollar, euro dollar, euro dollar, euro dollar. Where are you? This is day 3 as well. Well, fantastic. Again, there was the trade for London traders on day 3. Just want to check that on the CAD. Very nice. So we had that momentum candle on dollar CAD. Popped right up. It was sensible to stop would be higher up, but anyway. So euro dollar gave us the trade in London, even in late, 1, 2, 3, break of structure, pull back. here, pull back into support, creeping up, not very convincing. Maybe on that candle we'll stop below there. So that would have been coming into London, Frankfurt, and that really took off. Gosh, well, beautiful trade that would have been, guys, right? So these are the things we're looking for. Day 3. Okay. So from day ahead, well, we've got all of this length to come into. So we were talking about a dollar strong dollar bias. Now, are we breaking structure? Where was the highest low before that high? It was down here. So we've got to come down, according to the 5-minute chart at least, take out that structure. Okay? If we do that, then we can start building our thesis that we are going to drive lower. Now, how much lower, we don't know. I'd just be concerned about where we are in the week's structure. Okay, so we have high up in the week structure. I failed to make a higher high so far today within this week structure. So lower high, it's bearish. So this could turn out to be a weak low, and therefore we can target down here. If our thesis is correct, then the market might have an easy job of making it down to here, considering that this hasn't created a higher high. Just like over here, this was a weak low. The market came up, lower high, weak low. Where did it target? It targeted the weak low. So same thesis for today. US dollar trading inside the much about nothing. No, nice shout. Well pointed out. Thank you. Yeah, so euro dollar is trading within Friday's non-farm payrolls range. The market failed to break out. That's a very good point. The market failed to break out. So the thesis behind that, what I'd say about that on the fundamental side, talking about the greenback and non-farm payrolls, it was a softish data result. But you've got many out there that are hailing it, that the 187 jobs number were signs of a cooling market, and therefore dollar bearish. But in contrast, the 3.5 unemployment rate was saying otherwise. So well pointed out there. I like your style. You know, given that the dollar, the market has failed to really shun the dollar, and it pulled right back inside of that, then if we get a CPI print that is out of the ordinary or better than expected, I should say, then that could really fuel an explosive move, because we'll have a double whammy there of the unemployment rate, the failure in the US dollar to stay offered, and then backed by a strong CPI print, that will be pointing back to the Fed and um, would would underscore the ongoing economic data and divergence theme um, to propel the US dollar going higher. We've also got initial claims today uh, and continuing claims. So that's that comes out all at the same time. Crikey! Right, so it's going to be very could be an interesting hour ahead, guys. So we've got lots of very key data coming up. So let's see. Okay, well, we're looking like we're chipping away at that structure as we speak on the euro. Lovely. That's what we want to see, guys. Ahead of the data. Good stuff. So you see how we're building this thesis. This is how we can approach the market. We want to see that broken down. We've identified that we're high up within the range. That's not to say that this is definitely going to go down. I mean, we just don't know. But it is, we are preparing for what could eventuate. And if you're well prepared, then you're likely to catch these opportunities, these explosive moves, where otherwise you'd miss out because they tend to go by you in a flash. And that's what you want. You want them to, well, you don't want them to go by you, but you want them to go by in a flash and be on that train. And then you can shut down your screen and get on with your day and not be tempted to overtrade, trying to catch movements here and there. And just, one of these, a few of these a week, is all that you need to be successful in trading. Right, so target that week low, that's a nice 5R. Now, I'm not advocating that you jump into this market yet just because it's broken structure. Often what happens is when you get breaks of structure, they fail, as this is doing at the moment, but they fail and they come right back in to the origin. We've talked about this in the educational videos. Breaks of structure and they come right back in to the origin of the move, the displacement of that move. So your style might be, well, it's broken structure, I think it's going to pull back, I'm putting on a sell limit. And therefore, what can happen with that is, well, you can get stopped out, or the market can come up close to your entry and then leave without you, or it can just take off without you. So another style would be dollar cost averaging, working your way into the market. So you can have your most extreme entry might be, say, above the highs. There might be at an order block where higher volumes are. There might be in a fair value gap. All right, but you might have a series of these entries. So triggering you, I can't say it, putting you into the market as it comes up. So you've got an order down here, an order down here, up here, ping, 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 and then it rolls over, and you've got an average entry. That could be one way of doing it. But in that scenario, those sell limit orders, you are missing out if the market just goes off without you. Now, in this scenario, we've got the US CPI jobs data coming up. As I've advocated, I do not. My style is not to trade ahead of the news, not to jump in just because there's a strong number or a weak number. I like to see the market do what it's going to do, and then if there is an opportunity after the market's done what it's done over the data, and it gives you a basis, a foundation, and gives you a thesis, gives you a setup that aligns with your thesis, then great. If not, move on. So far, we're not breaking that. I mean, you might argue we'll go down to a lower time frame and see if it's broken. Yes, we've got to close, but was it really? That can easily come back inside and not come back. And therefore it's dragging traders in. So this is essentially what the market does to you. It gives you false sense of security that we've broken structure, so it must be going down. Well, for those that sold, it's coming back into their orders and putting them under heat, maybe you're heating into drawdown. So let's look at this dollar. What's it doing ahead of this data? Pull back to an hourly chart. It's sort of sitting on top of where we want to be, where we want the dollar to come into. We want the dollar to come in lower. Is it a bit much to ask? We've got support over here. So maybe this is the support for the day, maybe not, but it could be. And therefore the levels that we're seeing elsewhere, like in that euro, so if the dollar has come down as low as it's going to be, perhaps we've seen the high, therefore, in euro dollar, and we're looking for a break of that structure, a pullback to within current ranges of the New York session. So we're looking for an opportunity within this New York session range, high up, ideally around round numbers. Where are we in that respect? 110.20. So in the 110.20s, that would be an ideal entry point. We stop above the high of the day, targeting, as we said, that weak low on the downside. Wherever that was, can't see on the 5 minutes. Down here. Got stops as well to target all below here. Sorry if that chart is very messy. It's any better. So we've got that coiled market here. It's something else to note. Coiled market and the breakout of that coiled market. Most breakouts fail. So that also is another string to our bow. Most breakouts fail. So failed breakout, drop. Right, so I think we can wrap it up, guys. There weren't any other pairs that I was asked to look at, but that should give you a nice basis now. So, if you're trading dollar pairs, we're looking for strength in the dollar based on the day count, based on where it is within its this week's range, or the range, swing highs and lows. It's pretty low down. Other markets, the only one is scratching my head really on is this dollar CAD. The dollar CAD to me is a broken down market. So maybe regardless of what the dollar does, it can drop. US oil, oh dear. Okay, US oil is a breaking down market as well. So dollar CAD has got too many conflicting messages across the spectrum of the market. Obviously, it trades correlated to the price of oil. So we really need oil to continue, but it's very high up. Day 3, I believe it is on the day count. 3, which call it long squeeze. So if that's going to squeeze lower, then that is not going to help dollar CAD bears in their quest for a short squeeze. So just keep that in mind. But it is a first red day opportunity coming up. Maybe be able to squeeze a scalp out of it, but I'd be cautious with shorting this. So we'll wrap it up there, I think, guys. Any other questions? No problem. Just reading Eurodollar said not for range. Of course, you can trade off a range, but to put in context, no need to get excited. We think unless we see price outside of range, pretty much the same in cable. Okay. Euro yen. Euro yen. I've got that as a day 2. Day 2 tends to be a continuation, which it exactly was. So what was my notes were day 2, 3-day cycle, 3 days of longs, short squeeze. So we could see the short squeeze here. So we're looking for a short. I've noted that it's got 3 days of length in the market already. So in fact, with all yen pairs, guys, I believe I'm looking for this short squeeze. So my thesis yesterday was for sterling yen to come up and break out, which it's done. It's gone very high, but it's gone higher than I thought it might. It's come up to 50s, so that's fine. Short squeeze could be on the cards, coming back into the range for a continuation on day 3 to the downside. So yen pairs, I'm looking for yen strength, guys. That's for euro, the Aussie probably as well. Same scenario. So we've had a rally, looking for the move back in on the inside. No structure on the Aussie yen there. Support structure, I'm cautious of that. So you're looking for the best pairs. So this one here looks like a cleaner runway to the downside. It's got less support in that run, so that can give us a scalp, break even, let it run. That's dollar yen. So we're coming up into the data in 20 minutes, guys. I've got to shut this down. Dollar yen, 2-day continuation swing trade target. Right, yeah. So we've got swing trade targeting 144.50. Come up close to that. No cigar. Take 3 breakout longs. And we'll sell off day 3. Okay, so I've got a couple of scenarios here. A continuation to the upside that would be in line with dollar strength and our overriding quest for 44.50 on the swing trade that we talked about at the beginning of the week. That's well in the money and on the way to its target. But if that were the case, then tomorrow would be our opportunity to short. Or today, if we are going to look for a short, what I was saying here is with day 2 of the 3-day cycle, day 3 breakout longs. Yeah, so I'm basically saying we're already very long in the market, even though it's day 2 of a 3-day cycle, where essentially we're looking for a continuation of the trend, which is up. Despite that, I'm noting that we are day 3 longs in terms of we've got breakouts. Where's the breakout? 1, 2, 3. So we've got 3 days of breakout here to the upside. So there's plenty of money, positions that are in the money that the market can move into. Maybe that will be the fuel to eventually move up on day 3, Friday. So we'll come down and then up to target and bosh. Okay, guys. So sorry, I couldn't get where the stop loss for euro dollar. Well, I haven't There's no trade setup that's been suggested on my end with euro dollar. I'm just merely outlining the prospects of a sell-off. And then to trade that, what I would be looking for, I mean, ideally, what you want is a stop above the highs, right? And ideally, you want to be selling as high as you can. The structure point for me that created that higher high is down here, and we didn't break it. We haven't broken that yet, so there's, in theory, we're still in a bullish trend. Now, you could argue that we have broken structure, but depends on what you're determining the structure. So for me, the lowest high, sorry, I was getting that wrong. The highest low is here before that higher high. So that for me is a strong swing low, right? So until we can break that with conviction, I'm arguing that we're still on the front side of the market, and I don't want to be buying again, selling against that trend, because that can make fresh highs, especially as we come into this data. I don't want to be doing anything. I just want to let the market play out. If the data breaks that structure low and it's built up on the 5-minute time frame, so the candlesticks that we're on currently, so if we get that break on the data, maybe it won't come back, and so be it. But I'll have to sell it lower. But I'm looking for a break of structure, a move up, and then the market may be setting up to roll over. That would be ideal. But I can only make a decision where my stop loss will be depending on what market structure has come off the data. Where the highs and lows after the data. And that's where I'll be putting my stop. I'll be putting my stop in a place where if it gets taken out, then I'm more likely to be wrong about my decision, and that's protecting me against a market that's going to take off to the upside. And we can have a quick look at gold. Day 3, I think I'm looking for. Right, we've got that squeeze. In terms of the day count on Monday, day three, looking for the short squeeze. That is versus dollar strength, mind you. So we've already got that long squeeze. The opportunity was again in London. So we are heading higher, and perhaps we'll be able to sell higher up, or we're looking to buy low. But we are front side of that trend, so just be cautious. If you're looking to buy in line with taking out the shorts that have been built up. So 1, 2, 3 drops this week. So something's just triggered. Break even, or I hit target. So hit target on that NAS, guys. Very nice. Pre-data spike. There's that gold. So, yeah, we've got resistance up here, so maybe we're coming up into that resistance. Maybe we'll get a dollar positive outcome of CPI and jobs data, and we'll see that continue to the downside. If not, then the thesis is a strong move up to test yesterday's highs, to guard this week's highs up here. Okay, so it goes in. Be warned of that resistance there. Now we broke the structure over here. That created the, so we've got the pin, the momentum candle out of structure, rally, and that looks like it's coming right up into test the support area. What it's going to do, we don't know, but we're looking for setup. So I'd be looking for this scenario. If we flip that over, if we get a dollar strong number, so if we flip that market over, we'd be looking for continuation. So on a strong number, I'd be looking for whatever took place over here, the same thing to happen after the number. The same kind of market structure, if that makes sense. So strong number could be giving us we'll get volatility either way, perhaps, and then whatever structure we've built, we want to get below it, and that would occur on, say, a 5-minute chart for the short. And then ride that until minutes before the number goes. So impulse correction, we can measure that correction. Let's say it comes up to, let's say, a touch higher. So up into resistance. Got a minus 272 down near 19, call it 1910-ish. And then 1908, extension. And then the last month's down at 1902, last month's lows. Okay, so we're working our way down into last month's lows. Alright guys, so we'll wrap it up there. Good luck out there, and I hope you were successful today on this data and picked up some tips, and let's see what we get. And I'll be over in the Ask Our Analysis room right away.